Elon's Cybertruck ride around Austin, Rivian's 48% weekly rally, Nikola's shareholder snub, and more. Biggest EV stories of the week. 5 charts explain Tesla and car stocks in Q2 and what should work in Q3. Pledge against abnormal pricing practices retracted 2 days after being announced by Chinese automaker group. All that and more, so let's get to it. Tesla stock sitting around 274, doing a little consolidation with this low volume. Market cap sitting at about $870 billion with a price to earnings ratio of 80-75. Tesla's average volume is a little over 141 million, but as you can see, Friday's volume significantly lower than that at almost 114 million. On Friday, it was trading as high as 280 and as low as 273, so hovering around more of the low. 52-week high though is $314, while the 52-week low is 101. Odds are we're going to meet the 52-week high before we meet the 52-week low, but in this wacky world we live in, who knows what's going to happen. I've got one options contract that will expire this week. I'd like to see some gains, so if Tesla falls off a cliff and gets around 270, I might pull the trigger and just say fuck. Hopefully we have some strong volume with some intense buying pressure. We can see Tesla stock edging toward that $1 trillion market cap. Elon's Cybertruck ride around Austin, Rivian's 48% weekly rally, Nikola's shareholder snub, and more. Biggest EV stories of the week. Thanks to an 8-session winning run on the back of positive deliveries report, Rivian jumped about 48% this week. Fisker was not that fortunate as its second quarter production fell short of its guidance, and Tesla continued with its discounting even after the second quarter ended, raising some eyebrows. The electric vehicle space saw some buoyancy in the week ending on July 7th, despite the weakness seen in the broader market. Positive headlines from EV companies proved healthy for an industry sending stocks mostly higher. Here are the key events that happened in the EV space during the week. Tesla continues with discounts, Cybertruck buzz, and more. Tesla surprised analysts and investors by opting to extend the discounts it offered for new inventory vehicles into the third quarter. The discounts were offered as part of the company's quarter-end push during the second quarter. Skeptics saw the development as reflecting weak demand and raised concerns about its impact on the company's margins. I'm not surprised that Tesla has reinvigorated the loot box. This is how you solidify your retention and ensure that you remain a mainstay in this industry. I find it odd that if Tesla wasn't doing these things, analysts would accuse them of having hubris. You're damned if you do, and you're damned if you don't. My advice? Keep doing what you're doing, Tesla. You're obviously doing something right. Still, at least one development in China should give some solace to investors. Tesla was among a slew of automakers in the country that signed a letter to avoid price cuts that would kill competition, according to reports. It didn't take long for everyone to realize that that agreement was worth a buffalo nickel. But it didn't stop analysts from having a field day. I really didn't talk about it in depth because I knew what it was. All of it just felt like a good faith agreement, which if your company is facing annihilation, you're not going to agree to anyway. And that's what a lot of these Chinese automakers are going to realize, is that they cannot compete with Tesla long term with price until they get their cost to produce electric vehicles down significantly. But more on that later. As the Cybertruck launch approaches, the vehicle has created a lot of buzz among Tesla fans and bulls. And with good reason. On Friday, Tesla techno king Elon Musk offered an update himself, tweeting, "Just drove Cybertruck around Austin. I see you down there posting at 7:13. Was that note to Houston? Okay, I see you, boy." Or can we expect a bombshell on July 13th? Circle your calendars, guys and gals. Elon likes leaving cryptic messages in his Twitter feed. In response, fans asked whether Tesla's newest EV would arrive by September. Tesla bull Gary Black said he sees the Cybertruck launch as a game changer for Tesla, giving the company's volume a big lift. Additionally, one more automaker embraced Tesla's North American Charging Standard, or NACS, this week. Mercedes announced it will adopt Tesla's charging standard in 2025. This has ceased to become news. What would truly be newsworthy is if a company came out and said, "We will never use the NACS." But nobody's going to do that because it would signal that they truly don't plan to be around in the next decade. But we'll cross that bridge when we get there. Toyota, Honda, they have a lot of work to do. Rivian's emergence as a credible EV maker. Ed Bush analyst Dan Ives recently said in a CNBC interview that Tesla is the world and other EV makers are simply renters. At least one of the renters, however, has positioned itself well enough to emerge as a fitting competition to the Musk-led company. I've said it before and I'll say it again. Tesla has no EV competition. The only competition for Tesla, Rivian, Lucid is the internal combustion engine variant. Tesla welcomes Rivian's continued growth as it will be a catalyst for EV adoption over internal combustion engines. People fail to realize this. The more Rivians you see on the road means that there are more and more people taking to the adoption of electric vehicles, which will spread like a contagion among the populace. Rivian reported better than expected second quarter deliveries this week. The stock began climbing ahead of this week as the normal Illinois-based startup struck a NACS charging partnership with Tesla. It gained further ground after the latest update on deliveries. Sell-side went gaga over the developments and upped its price targets for the stock. Rivian was the best performer among EV stocks as it soared over 48% thanks to an 8-session winning streak. Talk about FOMO. Fisker Q2 production misses forecast. Teething troubles weighed down on Fisker as the company produced only 1,022 Ocean SUVs. The number paled in comparison to the 1,400 to 1,700 units the company had targeted. Fisker blamed the miss on a shortage of components from its sub-suppliers. Prototypes are easy. Production, that's hard. Nikola adjourned shareholder meeting yet again. Struggling electric truck maker Nikola failed to get shareholder nod to issue new stock on its second try. The company adjourned its annual shareholder meeting until August 3rd. Reports say a Delaware bill that expected to pass in early August might help the company, as Nikola would require a simple majority, as opposed to currently 50% minimum to approve an increase to outstanding shares. Sounds like a lot of the Nikola shareholders have quiet quit the company. That's odd. Audi's rumored Mexico production plant. Audi, a subsidiary of a German automaker Volkswagen, will reportedly announce on July 18th plans to open an EV production plant in Mexico. Incidentally, Tesla's Giga Mexico construction is already underway. 5 charts explain Tesla and car stocks in Q2 and what should work in Q3. Production, sales, interest rate hikes, bankruptcy, disruption, deals between warring factions. For car investors, the second quarter had a little of everything. It's exciting. Taking a step back shows a few things that investors should remember from the past 3 months and unveils a few stocks that can work in the second half of the year. One of the stocks could be Tesla. Tesla is tough to catch. The first lesson of Q2, the strong are getting stronger. While the complete set of numbers won't be available for a few days, Q2 was likely another record for EV sales in America, up roughly 10% from the first quarter of 2023. It isn't easy to ride the wave of rising EV sales to riches though. The second quarter claimed an early EV startup. Lordstown Motors filed for bankruptcy protection in June. It had trouble building electric pickup trucks and finding enough cash to keep building them. We got chart number 1, lapping the field. Tesla US market share versus select competitors is growing. Tesla is the one benefiting from rising sales. In the first and second quarters of 2023, Tesla increased US market share relative to Ford, General Motors, and Rivian. It's an impressive feat. No one really expects Tesla's US share to stay in the 60% plus range. Bullish Tesla investors would be pleased with 20%. The largest automakers in the world, Toyota and Volkswagen, each have roughly 10% of the global market for light vehicles. That gives the situation a little bit more context. Most bulls are expecting Tesla to double what Toyota's market share is today with light vehicles. That's insane. EVs aren't expensive anymore. Tesla's significant price cuts early in 2023 helped the company capture more share. The cuts have also made EVs pretty economical. This has been Tesla's plan all along. They're going to start at the high end, Roadster, Model S, Model X, and then slowly drive the cost to produce vehicles down in order to sell them to everyday Johns and Janes like me and you. We got chart number 2, a long-range Model Y versus average price for a new car in America. EVs were once considered a luxury vehicle, but with the price cuts and tax credits, a lot of EVs are cheaper to purchase than gasoline-powered cars. Shout out to the Model Y, shout out to the Model 3. As price comes down, there's only one real barrier to EV adoption, and that's the charging infrastructure. Good thing Tesla's been working on that since 2014. Take the top-selling long-range Model Y. It starts at about $50,500. That's roughly $2,000 more than the price of an average new car in the US. Still more expensive, but the price premium used to be about $10,000. Then there is the $7,500 federal tax credit to consider. That makes the long-range Model Y about $55,000 less expensive than the average new car purchase in the US. The Tesla Model 3 is less than the Y. The Chevy Bolt is less than the Model 3. There are plenty of affordable EVs for car buyers these days. I mean, I guess we could throw the Bolt in there. I wouldn't have done that. I mean, it's about to be discontinued. Unless you're looking to buy a relic, a collector's item, yeah, go buy the Bolt. But it's going to be odd associating Tesla with affordable. That notion will be tossed out of the window, however, when the Nueve Leon factory comes online and starts spitting out $30,000 Teslas. $1,000? Ouch. Affordable is good since consumers are stretched. The percentage of new car buyers that finance vehicles paying more than $1,000 a month for their car hit another record in Q2. More than 17% are laying out 4 figures a month. Chart number 3, stretching. Percent of US car buyers paying $1,000 a month for a new car. If you're one of these individuals, please let me know in the comments below. That's the equivalent to roughly 25% of pre-tax monthly wages for the average 25 to 34-year-old. The average person in that age range might not be able to afford a new car. The combination of rising interest rates and rising new car prices are the reason for the record. Car prices are coming down and interest rates might not go up much more. That would be good news for car buyers. They would welcome some relief. The experts figured that car sales would diminish, and they were absolutely wrong. Despite rising car prices and despite rising interest rates, people came out in droves to purchase new vehicles. Few cars. It's worth asking how consumers are handling higher payments. The answer is some aren't. Cars just aren't selling like they used to. Annual light vehicle sales are roughly 1 million to 2 million units lower than pandemic levels. That's a drop of roughly 10%. Some people have been priced out of the new car market. Chart number 4, US light vehicle sales. Sales are rising though. Q2 sales were up about 2% relative to Q1 and up about 9% compared with Q4. If the American consumer is anything, it's resilient. A new standard. One of the most unexpected Q2 developments was a plug. Everyone, it turns out, will adopt the Tesla EV charging plug in North America. It isn't officially everyone, but it might as well be. GM, Ford, Rivian, Polestar, Volvo, Mercedes all announced they will use the Tesla plug. Reasons are easy to see. One plug is better than multiple plugs. No one would accept the need for an adapter to plug in a lamp from IKEA. And Tesla has the most EVs on the road, the most charging stations, and its plug is a lot smaller than the competing plug called a CCS plug. Number of Tesla supercharger connections globally. Can anyone notice a trend? Moving to one standard is a win-win-win. Tesla obviously wins. It gets revenue from non-Tesla EV drivers. Non-Tesla drivers also get exposed to the scope and reliability of Tesla charging network. Other automakers win. The customers get access to the largest network of fast chargers, making it easier to sell their EVs. The EV industry wins too, because charging infrastructure is a big deal. More chargers ease range anxiety, a key concern for potential EV buyers. And it makes life so much easier for the industry. Imagine if drivers had to consider the shape of the gas pump before pulling into an Exxon station when nearing empty. The deal with automakers helped Tesla to one of the best starts to a year. Shares gained 113% in the first half of 2023, while the S&P 500 and the Nasdaq Composite added about 16% and 32% respectively. Shares have gained more than 100% in the first half of 2 other years, 2013 and 2020. In 2013, Tesla shares gained about 40% in the second half. In 2022, shares gained about 230% in the second half of that year. It will be truly exciting to see where Tesla goes from here, especially with all the good news catalysts that they have in store from now until 2024. Pledge against abnormal pricing practices retracted 2 days after being announced by Chinese automaker group. This is why I didn't really want to talk about this. What they proposed was essentially wishful thinking. And a lot of people made a big deal that Tesla was capitulating to China's will and all this other nonsense. It's a good faith agreement that really wasn't targeted at Tesla. Tesla is not doing anything crazy with their pricing, especially when their margins are so high. Could you imagine if the Chinese automaker group said, okay, everybody, you gotta aim for this margin, 5%, 10%, whatever that is. Margins would be the only necessary metric to modulate this deal. And it's not about how much margin that you're getting off your vehicle sold. It would be a deal about how much negative margin you're willing to take to compete with the likes of Tesla. It's a dangerous game of no limit hold'em. Many of these Chinese automakers will drop the prices significantly in order to compete with price to gain market share. Unsustainable. You're playing a deadly game of chicken that could leave your company upside down and the consumer in the lurch. That's what the Chinese automaker group wants to protect. They want to protect the individuals that are willing to go bankrupt in order to compete in this market. And the poker face on some of these companies, pretty good. Because Tesla is in no danger of destroying their margins. Industry leading margins. Now that we got that out of the way, people can stop assuming that China is trying to handcuff Tesla. Tesla is in a unique position. Most of the world is trying to aggressively transition to a sustainable energy economy. Regardless of the reasons why, this is happening, and China is at the forefront. As a country, they are the early adopters when it comes to the EV technology. There are numerous countries vying for Tesla to set up shop within their borders, and for good reason. It's not because they want to do flower power and save the environment. Oh no, there is money in them there hills, boys. Tesla knows what they're doing and they're efficient about it. They're not fumbling around in the dark hoping to figure it out. It's an immediate injection of cash within that economy. China's not trying to hamper their golden goose. Conclusion. Congratulations to everyone that dove into Rivian style. Hopefully those gains don't get wiped out by any number of landmines that present itself while Rivian is ramping up to volume production and they get back to their IPO price. It's one hell of a gamble, but congratulations on the win right now. Cybertruck is right around the corner. Alarm bells should be going off for both EV pickup trucks and their internal combustion variants. And $1,000 car notes are not stopping US consumers. This is amazing to me. And as prices continue to fall and interest rates may be turning a corner within the next year or so, yeah, that's all I got for you today. Be easy. Peace.